Welcome everybody. We'll start. As you know, my name is Jerke Verschoor. Today we have a lecture with a Russian flavor, since I'm the director of the Netherlands Education Support Office in Russia. So we have a speaker from Russia. Today, as you know, is King's Day. So thank you very much for all your wishes to us. That's why I'm wearing some orange. It's even more special that we have the Russian speaker today, because you might not know, but our Dutch king is actually having some Russian blood flowing through his veins because one of his ancestors married the sister of one of the Romanov Tsars. So everything is here to have a nice lecture today. A lecture on entrepreneurial finance. With today Hein Rolfsema. You know him already pretty well because he's the co-founder of this course, responsible for the content of the course, leading researcher in entrepreneurship at the High School of Economics in Russia, also associate professor, professor at Utrecht University, and director of the Dutch Centers for Entrepreneurship. Now with us is also Ivan Sergeyev. Добро пожаловать, Ivan. Welcome to you. PhD in economics. Actually also a colleague of Hein Rolfsema, because he started this year as a lecturer at the High School of Economics in Moscow. He founded his own company, online sales of children's clothing, and he just told us that due to COVID-19, well, of course, online sales went up quite well, but he's also a managing partner of the Orange Company, which is a financial and business consulting company. So I think all ingredients are here for a good lecture on entrepreneurial finance. And with that, I would like to give Hein Rolfsema the floor. Have fun.
Yeah, thanks, Jerke. Yeah, so let me start off. A bit of disclaimer, I have some slides. I'll try to be very practical actually about funding your startup. Also, over the weeks, there have been many questions related to funding, and I hope you get some inspiration and some ideas out of that. But there was an important question why I don't wear orange. So that's a good question, but I'm a bit of a Republican, so I abstained from wearing orange during King's Day. But let me share my screen for the presentation. It's okay. Yep. So let me put it this way. So Jerke, can you see my screen? Jerke?
Yes, I can see it, but you have to put it on slideshow. Yes, perfect.
So my basic question of the lecture today is, thanks all for you. You can also see it, how to fund your startup. So many questions on how to fund the startup. But before I start my lecture, I will provide a bit of guidance on how to fund a startup. But I must say, don't follow my advice like a sheep. Because it is for inspiration. I'll give a lot of practical tips, but they will also be very provocative. So, not everything can be applied in your situation. Maybe the majority is not applicable, but I just hope that you can listen to this and you think, well, I didn't think about it that way. So it's simply to get a bit of inspiration as well. And I have to say, although we are with a lot of people, I would like to mention that everything should stay between us in this lecture, because there are lots of things that will be provocative, and it's bad for my reputation if everybody starts talking about it. My second thing is that I will talk a bit about financial metrics for entrepreneurship, but I have to say that they are completely different than in your accounting course. So I'm not going to give an accounting course here, but you should simply, if you are in entrepreneurship, forget everything about spreadsheets and this kind of accounting course. And you should especially forget everything that people who work in banking think they know, because that is probably the worst thing, banking knowledge, if you want to start a company. So so that is, and the third thing that I would like to say, after this lecture, you might think that I'm a very bad person. I'm not a bad person, and I hope that you will forgive me with the things I'm saying. Just keep in mind, this is also a lecturing purpose. I'm not really a bad person. So I have actually a few inconvenient truths about funding your startup. And let me start with the first one. So the first inconvenient truth is that your startup will most likely fail. Some 80%, 90% fails. So so don't expect anybody to give you any money for your startup. And you simply better to accept it. Nobody's going to give you money. And the good thing about this is that you actually don't need money for your startup. So you will probably end up seeking human kindness, like a bit of a beggar for a bit of things. So you shouldn't be naive and think that people are going to pay money for something that is so likely to fail. But let me explain a bit why the second part, why you don't actually need money. If we think about what we know about entrepreneurship, this may be small, but so I'm going over it. On the left-hand side is what is called the lean launchpad method. So if you've seen the assignment, I've talked about the business model canvas. This is probably the main tool, but lean launchpad every entrepreneur should know. And the idea of lean launchpad basically is that if we look at setting up companies, there are, I would say, 4 stages to be distinguished. The first is what you could call customer discovery. Let me just make a bit of a pointer. Laser pointer, but of course sometimes so this is a bit like customer discovery. I'll come back to this: customer validation, customer creation, and company building. Now, customer discovery is basically about really understanding well the problem of your potential customer. So you do a lot of research of what the actual problem is. So again, my tip to you is, for a business to start, don't have a business idea. That just blocks your view on solving a real problem that people have. If you are so convinced about your business idea, that is not a good thing. You should start with really understanding the problem and the jobs to be solved by others. This simply takes a lot of time. And then you must think about what is the optimal solution to do this. And then you must find out whether people are actually wanting to pay a bit of money for that. And after that, you can actually ask for a bit of money. There's nobody going to give you money if you have not have a good problem to solve, and if you don't have a good solution first that has proven to be what people want. Now, so that takes 2 years maybe to do this. So for the first 2 years, you're just putting in your own time in finding out customer discovery and customer validation. So you don't need real money for that. So you can start with that. So that is important. If you start to have customer creation, so you start to grow and you have to build some kind of a thing that you have to actually sell to customers and do pricing, then it comes a time for investment. So in the beginning, so people say, I cannot start because I don't have funding. Well, you set up a website. Maybe one example of customer validation, you may have seen in Facebook that there are products, and that if you click on them, new Beamer or so, then you're to go to a website and there you can buy the new Beamer, and then it says, well, you're on a list. When we have made the product in 2 years' time, you'll be the first one to have it. This is just a startup that tries to see whether their price is actually right. So you must be creative and not. So my first thing is that there are these stages in the beginning, and this is simply your own time you have to put in. And you have to find a nice incubator, often for free, with a bit of mentoring. And then you do this. And later on, when you have a product market fit and a proven business model, then the investment question becomes relevant. So my first thing is that a lot of people already start thinking about funding before they actually start, or ask money before they actually start. This is ridiculous. You should wait a bit with this. So as 80% fails at this stage, nobody is going to give you money here. That is, you should prove that there's this market fit. So this is my first kind of thing. This comes close to also what Thomas was saying last week. So the second inconvenient truth about funding your startup is that you simply have to lie and steal. So you have to lie and steal from other people to fund your startup. It's not that we are in a nice world. I cannot make this nicer. Now, the question is, of course, if you are a good thief, where do you steal the money for your startup? And here I would like to give a few practical tips. But the first, a bit of a slide, is that there are basically 4 sources where you can fund your startup from. The first, to the left, and I'll go deeper in them and give practical tips a bit later. Your team. So often sometimes people think about setting up a company themselves, but often, again, these 90% of startups are setting teams. So you should be together with people who can put in their time, capital in the venture. So if you are the only one that has a bit of time or a bit of money, be careful with finding other people. Then there are these friends, families, and fools that maybe give you. Again, I go in detail. The second thing is what I called, you can have angels and I would say other unemployed people. Angels and other unemployed people can be funding. And I go back to that as well. Then the third one is employees. Well, in startups, I give you a tip. Never call people employees. Call them co-workers. That sounds a lot nicer, like they're equals. But what you should do is, of course, find people, employees who fund your startup in a certain way. And I'll give a few tips on that. And then the last one is banks. And of course, banks for entrepreneurs, they are our enemies. So how do you fight banks? That's also an important thing, or how you use them. Last, very small comment. I always have to laugh about startups that talk about venture capital. Venture capital is simply posh people who take themselves very serious, but they come much later. So if you are a startup, you're not talking to venture capital. So venture capital starts with investments of 10, 15 million. So this is just way later. So don't take that too seriously. And also, on the other hand, be careful, because if a VC wants to talk to you as a startup, they're probably not very serious VCs. So they're often business angels in disguise in that sense. They're not really VC companies. So this is a bit like a mapping. Now let me give some slides, a bit of tips. I start with where to steal. So the first, who are your victims? Your victims first are your parents, friends, and your partner. So these people simply love you, and they like you to succeed sometimes. So they like you to succeed. Now I give a few tips. If you approach your parents or friends, people always think that you're doing the wrong thing, that you did not find your purpose in life, and you are their son, and you may be unhappy. So what you should do with your parents and your partner, your spouse, girlfriend, boyfriend, or whatever, is say that you really have found a purpose in life. You don't say, my idea is great and we all get rich. They don't believe that. What they want is to give you a bit like idea that they believe in you. So just play this like saying it's your passion what you're doing, not that you get rich, because that is what they like, and they might give you money for it. Also, my second practical tip is you should, if it's possible, is try not to ask for money. Try to ask for things. So often it is much easier to ask to borrow a nice car. So one of my friends who set up a startup, they actually had another friend who has a big Porsche. And every time they had to see a client, they borrowed that Porsche to make an impression on the client. You don't have to have your own car. Just find somebody who gives you the Porsche car. The same is, you might have an uncle who has some kind of a space for where you can start. So maybe try to forget much about asking for money. Maybe you have to a bit, but often you come very far by asking actually things from people. So avoid asking for money. The second tip is steal from your current employer. So there, just for example, maybe there are quite a few people working in university here. Now, suppose you have 4 days or 3 days university contract. well, we all know if you work from university, you can do that work in one day. So the other 2 days, you can work on your startup. So you steal basically from your employer, who pays you more money than he or she should actually do, because you work actually on the side for this. The same is true if you're a lawyer and you want to set up your own firm. Just steal all the contacts of your current, steal the data, steal everything you have in your current employing situation. Sometimes you keep a bit with this employer just to be to do it. So time, these are the third one is you should steal from universities and incubators. I work a lot with these people, and they only care about how many startups they have, because they have to show to people who give subsidies that they have all these startups, etc., etc. So they just care that you're there. Make use of that. It's very difficult often for them to do that. So you go after universities and incubators who have to show to subsidy givers that they have this kind of thing. So just pretend. Now, very important, if you are in university incubator or incubators, never listen to the coaches that work there. Just pretend that you do and take the money. You have your own idea, etc., but don't offend them by not listening to them. You just pretend that they are good coaches. But I can tell you, a good coach that works in a university incubator, that doesn't exist. So just be nice to them. It's very important, and I'll come back to funding, never give incubators or universities any equity in your startup. Just be there and do the program, etc. Go after some seed money, but don't give them equity. Then lastly, be aware that you steal from yourself, because you probably are a talented person, and if you're a talented person, then you can have a good job in a company and have a good life, etc. So you must accept, but you, for the coming 10 years, you will be a very poor person if you're an entrepreneur. So you're stealing from yourself, and that is basically one of the lessons. So these are your prime victims first to steal. The second one, there are more victims. There are more victims. So first is your team. So start with friends. Always keep the majority of share yourself, and pay them in stock options, and that have no preference, just normal stock options. So they become useless if you get into to venture capital firm. The point is, you might have a bigger team because you don't have to pay them any salary. So they should put in the money if they have, or the time, but you call them the founding team, because that is free. You don't have to give them. So maybe you build a bit bigger founding team first, to have simply employees. So that is a thing. Also, a tip is select people who already have a job and who do this next to their job, because they might actually be interested in joining you without a lot of risk. The affordable loss principle that Thomas was talking about. So you might go strategically after people who you know that can work for you, but they don't ask for salary, or they don't ask for much. Now, an interesting thing next to that is that we have so many entrepreneurs, serial entrepreneurs, the Ivans of this world. I'm also a serial entrepreneur, but who actually like these kind of jobs. So they already have made a lot of money. They just want to have more money and fun in startups. So they give the help for free. Don't worry for that. Then angels. I'll come back to angels. Be aware that many angels are simply elderly and bored people. They have made some money somewhere else. They are retired and they have nothing to do. They don't want to sit on the couch. And so So they're simply bored. Now, I use the word pimp, but pimp your startup for their money. They just like to be busy. As soon as they want to have a job in your startup, don't do it. They often start talking about that you have no idea about finance, etc. And you should have a finance director and that they can help you with that because they have this background in banks. It's all fine. Never give them a job, an angel. Don't put them on the board. Let them fund it. And by the way, never give an angel more than 10% of the equity. Why? Because if you are successful, if you go to venture capital, really keep this in mind. Listen, if you go to venture capital later and you're successful, a venture capitalist will say the founder should always have more than 50% in the company. Otherwise, he will not be motivated. Now, a venture capitalist will always put in at least 30% want to have of your shares. If they put in 10 million US dollars, 15 million US dollars in it. If you already give 20 to 30% of an angel, you cannot attract venture capital later on and you die. So 10% max for angels. Then suppliers and customers. Suppliers, just try not to pay them. Lease everything, etc., etc. So on the one hand, you try to shift the payment to suppliers. And then you try to make a business model with pricing where your customers pay you upfront. This is actually creating liquidity and often actually funders and banks, they have no clue what actually cash flow management means. So if you do it this way, you simply sell liquidity as I'm doing so great with cash flow. It's rubbish, but they see money coming in, which is basically your working capital because you lose it later on anyway. But it looks like cash flow, which is net cash flow, which is a great thing. So it impresses investors. Banks. Banks are the enemies, of course. Why are they the enemies? Because they'll never give you money for investment. They always talk about it, never do. What they want is to have you as your client so that you pay them money for having an account there. Now, the problem is that you might have problems as an entrepreneur of paying your suppliers. In that sense, because some of your customers might not pay. So banks don't want to, you don't want an investment from banks, you want to have a credit facility at banks. Because if something goes wrong, it's just like some kind of a credit card that you can go in and then you pay a bit of interest for that. So you negotiate on the level of interest there. Try to get a bit of credit, not in your account, just like in your overdraft facility. You don't need real money of the bank, you just ask them, if I'm 10,000 euros short, can I borrow it? If that happens, that is what you use the bank for. Last tip, don't focus on one, steal from them all. So go over them and steal, just make a plan and steal from them all. That's important. And never. Now, what are big dangers? Big dangers, first big danger is business angels. So I'm not a rich poor, but I'm also not poor. I can tell you that. But I'm richer than 90% of the angels I know. So 99% of the business angels don't have real money. They just pretend. So they go to many of these drinks and dragon dance, etc., and wah. So if you have a business angel interested in your startup, ask, where have you invested before? Then a lot of them will say, yeah, I'm just new to this business. Kick them out. So don't waste time on that. Take the time to find a good angel. I think that Ivan will talk more about that later on as well. You should, because I know his company well. So this is really take your time. Don't go for a quick win. Many of them is simply not good. Public incubators asking equity, don't do that because they are bureaucratic. Ivan also knows the Skolkovo kind of thing. You can't get rid of them. So don't make any illegal arrangement with them. Banks try to avoid. Now, one tip is, if you ask people for money, your friends, your family, that might not be easy. But what you sometimes can ask is whether they can serve as collateral for you. They don't have to really give money, but with that collateral, you can get a loan with the bank. So they don't have to really put in money, but they can use, let's say, their money as a collateral. Sometimes that is a tip. So network events, also very dangerous. As a startup, get serious and work hard. Network drinks are simply for sissies and local public servants wanting to look cool. But there are 90% of the people you start talking with have nothing to add to your startup. So they are a waste of time. Contests where you can actually win and show this kind of thing, they might actually be quite okay. But in the modern world, look also for corporates behind them. So if you can pitch and in contest with large companies like the Yandex in Russia or the Unilevers in the Netherlands or etc., that might actually be quite okay. But don't just go to network events. Just spend your time wisely. Being reactive with funding is also very dangerous. So if you get a bit of funding as a startup, you think you're okay. And many entrepreneurs will tell you, always look for funding, for more funding. Don't be happy with an initial kind of thing. If you have round A, well, that's a long way gone. Start talking about B. Start talking about C. So always be on the left, because if you're really successful, listen to El Chapo in the series. You never be sure that you run out of funds. That's really important. Okay, so this is my first start of stealing. Last tip: invest in that you get the right words. Really, you have to invest in that that people think that you know what you're talking about as a startup. So, for example, I give a few examples. Don't say, will you please fund my startup? Say, I'm bootstrapping my startup. Can you help? It's exactly the same line, but the second line is that you show that you know, okay, this is how startups work. Don't say, I have no clue how to price my product and whether it will add real value, which is an honest answer often in the beginning. And just say, following customer validation, I'm improving user experience, which is basically the same thing. Don't say my startup is making losses for the foreseeable future. Say something like, I'm growth hacking with network effects. This is the same as making big losses. Don't say we have a recent history of massive fuck-ups. You just say, we have developed a strong narrative. So it is important, if you start working on funding, is that you have these kind of lines ready. Prepare them. Good luck with that. So, inconvenient truth too. All good startups make losses for at least 3 years. And start a business plan that shows a profit is ridiculous. So keep that in mind. Now I have to Jerke, I think I shared wrongly, so I will reshare for a moment.
Okay.
Because I have to share my sound as well.
Okay, yes, you have to click that button.
Share sound.
Yeah.
So you can again see me probably, yeah?
Yes.
Now, because this is me talking and you think who the fuck is Hein, but let us listen a bit about this kind of thing to the most important, well, most successful and nicest, I would say, entrepreneur. Currently, I would say. So this is Jack Ma. He first talks about entrepreneurship, but the second part of his small talk is very important. And that is about something that is crucial to think about your startup. So
when you are 20 to 30 years old, you should follow a good boss.
Not working, isn't it?
Oh, it is. It is.
Do you hear him?
I hear him. Yes. Put it loudest, and everybody turn on your.
To learn how to do things properly. When you're 30 to 40 years old, if you want to do something yourself, just do it. You still can't afford to lose, to fail. But when you're 40 to 50 years old, my suggestion is that you should do things that you are good at, right? And not do things that, oh, that's very interesting, I want to try something new. It's a bit dangerous more. When you're 50 to 60 years old, spending time training and developing young people, the next generation. When you're over 60 years old, better stay with your grandchildren. So 30 years old, we people next to 30 years are the luckiest period. We have a lot of challenges, a lot of things are happening, and with our knowledge, with our physical power, it's time. I was born in a very poor family. I never got a great education. I failed all the examinations. For what reason? I don't know. Later, I realized I don't have money, I don't have technology. The only thing I competed with my people, the young people, is let's compete for 10 years later. This is what I believe 10 years later will be happening. So everything I do for that goal, I know 10 years later, this thing is going to happen. So prepare for that. Because I know if I compete with him for next month, no chance. It's a challenge, but it's an opportunity. And it's the opportunity for people like us. The most difficult thing is to convincing a successful people. When you tell him, this is a great opportunity, he said, no, forget it, right? I've been doing this for 30 years. But for people like us, we're looking for opportunities in order to survive. If you want to be successful tomorrow, it's impossible. If you want to be successful a year later, it's impossible. But if you want to win 10 years later, you have a chance.
Okay. So, Jerke, this was all clear? Just a bit of a...
Yes.
Okay, thanks. So, the key thing is that if you want to be successful as an entrepreneur, you look for things that happen 10 years from now. This means, I'm not saying that you should make a loss for 10 years, but he does. If you think about Tesla, Facebook, ambitious ideas are about making losses for a long time. And so that is something that you have to keep in mind. The thing is, of course, asking for money is that you ask for money to cover your losses for a long period. Now, this is one lesson, which is important to as a perspective. Now, the question, of course, is in entrepreneurial finance, if you want to go for investments and you have nothing to show for, basically, how do you do that? So how do you make people invest a lot of money to cover your losses, basically? And there are two words, two terms that are crucially important that you have to understand for this. One is what is called lifetime value, and the other one is called cost of customer acquisition. Cost of customer acquisition means that if you do this customer discovery thing, you really have to measure what it will cost to land one customer. So maybe you have to give a lot of free things in Dropbox to have one paying customer. So one thing that is important is one customer landing that, what would it cost? The second thing that is important is if I land that customer, how much will that customer pay in, let's say, the coming 5 to 6 years, which is the lifetime value. How do you do that? You have to measure everything at the startup. And here you have to say the conversion rates. So if I go and do marketing and things like that, how many of the people that I reach are actually becoming my customer? And the second thing is that every customer that I land, how many of them will stay customer in the next month? So you build a system of metrics. Funding a startup is not about financial metrics. It is about operational metrics that you see. And these are important in what is the percentage that you land? What is the percentage that stay? So that's important. Lifetime value, well, it's very simple. If you have, if you ask, let's say $100 a year, and every year 20 of your customers disappear, then the average customer stays there for 5 years. If it's 100, then the lifetime value is 500. Now, simple calculus means is that on the one hand, you have the lifetime value of the future income. And on the other hand, you have the now cost of landing that customer. These are the two metrics that you always have to keep, you have to be able to present. So why is Tesla the most valued company? It's not that everybody is discounting the profits, etc. No, because we see exponential growth in retention of customers, and we exponentially see in 10 years' time what the market share of Tesla will be. We may not agree to that, but that is actually the lifetime value at work. These are the two things. What other things should you know? Well, lifetime value, cost of customer acquisition. You should always have the conversion rate. How many people go to your website? How many people try your product? How many free users do you have? And what is the percentage that converts into paying ones? Retention rate, once they are paying, how long are they stay in paying that? Then you have the burn rate. Burn rate basically on a monthly level. How much cash do you lose? Then if you have funding from an angel, VC later, etc., the runway is that amount of funding divided by the burn rate. Is simply how many months do you still have before you go bankrupt. So that's basically the thing. And then last thing, I don't have that much time, unit cost. If you want to be convincing to funders, don't have your firm financial things. You should, as a startup, be able to show the margin for the customer, per customer. So what is the margin you make for a user? And you do that by having unit cost, the same as these kind of things. So not so much for the whole company, because it doesn't exist yet. It doesn't have a customer base. You don't know. You want to have, you can track unit cost times the amount of thing. Very important. So no company Excel sheets, please. Just unit costs. So what are my main lessons of this practical lectures? And yes, I will share the slides with you. I see people. You don't really need money to start. You need information, analysis, put in your own time, bootstrap a bit of funding. You don't really need it. Steal from all sources a bit, but consistently. Keep on doing that. Accept that all startups make losses. So don't pretend that you're going to make a profit in the foreseeable future. Don't be naive in that, at least towards serious people. Invest a bit in entrepreneurial finance terminology and just pretend that you also understand it, so that you know what you're talking about. Okay, Jerke, this is my contribution. Let me unshare my screen.
Thank you very much, Hein. And as expected, there's a lot of nice comments on your lecture, with a lot of valuable lessons and a lot of questions. But before we dive into them, let's ask Ivan to start his presentation and see what he comments also on Hein's lecture, and see what lessons did he agrees with and which one he used himself. Ivan, please, the floor is yours.
Yeah, thanks a lot. Let me just share my presentation. I will start with that one.
Yes.
Okay, great. Okay, dear ladies and gentlemen, thank you for coming to this workshop. I'm Ivan Sergeyev. I'm an entrepreneur and a lecturer in the University of High School of Economics. In the university, my subject is how to build and run your own business. I want to thank Professor Hein Rolsemer for his profound speech about entrepreneurial finance and the respective strategies, which was found very practical and inspirational. I will continue to talk about entrepreneurial finance, in particular about how to approach investors and what questions need to be addressed before looking for investments. And as an example, I will use one of the companies that I co-founded and still run as a CEO. Let me introduce the company Bambini Zone. It produces clothes for kids with the core product jumpsuit for kids. Currently, the company runs multiple sales channels, including 32 branded stores across country, marketplaces, distributors. It's a cash positive with over 50% annual growth rate in revenue. Over 8 factories produces Bambinezone's clothes in amount of almost 500,000 items annually. However, back to 2014, Bambinezone was just a project created by my current partner Alexandra, who was so inspired and passionate about her idea. So I added her picture to the slide. So what was the product? She invented a special jumpsuit featuring a functional fastener for easy toilet and child hygiene. It turned out to be a very useful and practical feature that helps a lot to parents to care after their kids. So she was so excited and inspired by her idea that she decided to create a sample and test it. When jumpsuit was finally done, it appeared to work very well. And actually, it's referring us to the first tip of Professor Rosimer, that you don't need money just to start your business. And Alexandra, after that, Alexandra came to the idea to produce several jumpsuits, much more than one, and sell them. However, it apparently requires some funding. So it was the next stage when now you need some funding. So at this stage of project, to get financing, most entrepreneurs go for the source, so-called FFF, which stands for Friends, Family, and Fools, in a funny way. Those money can also come from accelerators or any venture investors. But Alexandra opted for another option. She applied for subsidy from Russian government, which provides support for young entrepreneurs. So in this way, she received $10,000 as a subsidy. Though it's not much, but it's enough to keep going with your project. And again, as it was said before, such public agencies where you can get a subsidy, it's a nightmare from the point of view of bureaucracy. You need to fill out all the forms, talk to many people, but still, if you're persistent, then you can get this money, and this money for free. So you don't give up a share, you don't give up, I don't know, you don't need to get money back. So it's crucial to use financing wisely and efficiently. It's obvious. Here I show how she uses these funding. It allowed her to improve the product, arrange production, launch website, and apply for the patent, and start selling online. She got great feedback from their customers. And again, as it was said in the first lecture, the retention rate was very high. First sales reached 4,000 items. Here I need to say that a good track record of first sales will address most of the doubts and questions from investors. So when we were in talks with different investors, really most of their concerns and risks were addressed by one answer. Okay, we have quite a few sales for now. If they told me that, well, we don't believe it, and it already exists, and so on and so forth. But I'll get it to these points later on. In other words, from an investor's point of view, the first financing allowed her to prove product market fit by selling the first 4,000 items. Product market fit stands for the fact that there is a demand for the product and that you managed to find a real pain of the clients and you solved it. The financing also allowed her to secure its uniqueness by getting a patent for the innovation. And finally, it allowed her to acquire first key customers, so-called early adopters, who were writing great feedback about product and demonstrated very high loyalty. Again, it's about retention rate, very high retention rate. Early adopters are those customers who really love the product and ready to buy it. They are ready to tell about it everywhere and share it in the social media. For business to be successful, it's crucial to have a limited group of people who love this product, as opposed to a large group of people who simply like it. Indeed, those people are ready to, to protect your brand. They for free. They just keep writing posts about your product, and they answer different questions by themselves, sort of giving a very positive flavor, providing a very good positive flavor about the brand. Despite all those achievements, she needed more financing to build up a company. She needed expertise, team, marketing, sales, production, etc. And at this stage, I decided to join the company as the CEO and to capitalize my expertise and management and startups. I have an investment in the company, $100,000. So finally, I served as an investor from, I guess, category FFF, which, as we remember, stands for Friends, Family, and Fools. Hopefully, I joined as a friend. Why I believed in this company? Why I decided to invest and run it? Because of the results that were achieved at the stage one. They demonstrated to me that there is a high demand for the product, great feedback from the customers, as I said, and no racing, which happens when the product can be easily copied by the rivals. So it loses its uniqueness, which leads to severe competition. So in our case, it was the second source of financing that enabled us to turn the project into the full-fledged company. Again, how we use these funds, you can see that on the slide. I hired first people, starting to build up a team, invested more in marketing and distribution, as well as launched our own production site, and also provided a basis for international business expansion in the future by applying for patents and trademarks in key markets. We got patents for our product, for our innovation in China, USA, Japan, and Europe. Again, what we actually did at the stage two, from investors' perspective, we finally prepared a company to raise more funds to scale up a business. In particular, once again, we have a proven solid track record of sales, uniqueness, team with required expertise, functioning operations, and opportunity to grow globally. The last factor is highly important for investor in Russia for a number of reasons. For example, global operations give more options for investors to sell their stake in the business in the future. And as well, global operations also provides opportunity for the company to reach higher growth in sales. However, given all of the above, it turned out to be not an easy task to find an interested investor for the project. I sent out hundreds of emails to potential interested people. I was getting the same questions again and again. Well, actually, it was a nightmare that lasted for several months. So what questions? The most questions I got. It's for instance, it's not a digital sector which is trending now, or is your uniqueness enough to win the competition, or is it the right time for your product, or we don't believe that it will take off, etc., etc. All these comments and questions were good, but you keep answering them again and again. My approaches were to email each and every investor that I knew and heard of. And also, I talked to my every other friend about my project. Finally, my second approach worked. So in 5 months, I found an interested venture investor. It took us 4 months to negotiate, and we raised $1 million. So how we did it? How we persuaded the investor to invest? Firstly, he had already invested in several projects related to products for kids, and our business perfectly matched his portfolio. Secondly, and actually it's the reference, the reference to my previous slide, that my first approach for searching an investor was not right, because I tried to cover as many investors as I could, whereas I had to investigate, I have to learn more about investors, what their portfolios were, what their interests were, and I will cut my way to money. Secondly, we prepared a well-structured structured pitch deck, which is a presentation for investor, where we distinctly demonstrated all key factors: product market fit, uniqueness, high demand, team with a respective expertise, potential for high growth globally. And finally, there was a chemistry between us. It's highly important for efficient development of the business to have the same values with people you work with, especially with investors. I often said Alexander that partnership is more than a marriage, so it's not easy to divorce. So, in a nutshell, I would like to summarize key ideas of my lecture, of my speech. Successful entrepreneurial financing requires you to believe in your product, to work with your product, continuously improve it, look for the right investor, and know your investor. Thank you very much for your attention.
Thank you very much, Ivan. And it really kicked on well with Hein lectures. Dear attendees, since you all know Hein has been moderating the earlier two lectures, I believe it's good for Hein also to take the questions and start the conversation with Ivan. But perhaps a very first question that is more broadly that I would like to pose. It was also the first question that was asked today, and maybe I can ask it starting with Ivan. Why do entrepreneurs fail, and how do they learn from their failure?
Thank you. It's a very good question. I will try to talk very shortly. Well, by statistics, the first reason why entrepreneurs fail, it's not the right product. So they don't find a product market fit. That's why I was so focused on this point in my lecture. And there are other reasons why people don't succeed in their projects. But I need to say that financing is not the first, not the second, and not the third reason for the failure. And how do we learn? I can say that we went through lots of challenges. And for instance, we developed the wrong sale channels that were not good, didn't have potential for the high growth. And it gave us a very good lesson just to rethink our business model and start growing. But actually, it learned us not to stick something that we got used to it. So we kept changing every time when we face the issue. So actually, this was the main lessons for us.
Thank you, Ivan. Hein, please, if you take it further. You're muted. Yeah.
Something provocative about this first question. Look, we are different from animals because we don't learn from experience, we learn from reflection. And the thing is, what you should do is that in your life, if you make a task list, in the evening, you should look what you have achieved. If you have a business meeting, first look at what you've done in the past weeks, not only look forward. So the way of learning is reflecting on what you have done. And lots of people don't do this in a structural way. And that is why we learn very quickly. And so as an entrepreneur, you should be simply open-minded and look what has happened in the last week, etc., and learn from that. That's my first thing. Jerke, I have things, because Ivan can look in the Q&A, because lots of questions here. Maybe I've looked at mine and I simply go over them very quickly. Ivan, if that is okay with you, gives you also a bit of time to look at yours. So I've written what I'm going to do, Jerke, is to go over them very quickly and give a bit of an outline. I did not order them, so I just go over them. So the first one was asking, so currently we have somebody as an earlier investor coming in. You're pretty critical about that. What should we look for in that sense? So I think that is very important if you look at early investors like angels, is don't look too much at their skills, look at their access. So what they can achieve for you. Do they have access to customers? Do they have access to suppliers? Do they have access to these kind of things? So that is important. So not just the money, but see what they can open for you. That's important. And not so much whether they're good in finance or whatever. So focus a lot with early investors on the access. Second question was about, yes, my company is more a social company. How does your valuation goes there? I would urge you to go and look for what is called the theory of change. You can Google it everywhere. The thing is, how can you put, let's say, a social impact numbers, how many people you will be helping, what probably the value would that be? So instead of looking at finance, you look at impact, but it's basically the same kind of growth calculation. Then a question is, okay, so 10 years from now, how does that work? So I think it's very important to look at trends. So to look at online platforms, black blockchain, artificial intelligence. You should read, if you're an entrepreneur, you should be interested in this kind of long-term trends to be successful and put into it. Then there was a question, we are with 3 people, how shall we split the equity? And the person said it was my idea, so I take 70% and the other one's 30%. Now, you shouldn't be too, so the thing is, if you would succeed, you will be a billionaire with 51% of the shares. If you get 70% and the others 30%, they'll simply be demotivated in that. So what I would urge you to look for in most of the times, never split it equally, never 50-50, because then you cannot decide on what to do. So you should keep the majority simply 51%, but the rest, try to get if you have partners, to keep that in a motivation. If you succeed, you'll be rich anyway. I said you should steal contracts from your current employer. Well, let me nuance this a bit. Not while you are employed. You should get the data, get the contacts, talk to people that you might be starting your own business and things like that, but don't actually steal contracts. You steal the contracts when you leave that company. That's how you build your base and your customer discovery out of that. Okay. Then the question was, if you pitch for ideas, how are you make certain that you don't share your ideas and that it gets stolen? Question I get most of the time. The thing is, what you should do, often your business model is quite complex. Either you tell parts of it and not how they connect to each other. If you have a dumb VC or dumb angel, he'll buy that, because often the secret sauce is in the combination. But it is indeed wise to think about why does it work, and you don't tell that, but it's not easy. Okay. Somebody could say, yeah, but if you fail, you have to repay the loan. That and there was also people who said that I should not be so bad for banks. What I try to say is in the beginning, yes, try to avoid bank loans. Try to avoid the overdraft that you have to repay, exactly because you would not have the funds to do so. So yeah, but if you do, well, yeah, then it's difficult, of course. Which platform? There are many platforms, Get in the Ring, Open Innovations, all kinds of things. Bluff your way in as a startup. Often these kind of conferences, they are short in pitches, they're short in young people. Even if you're just working a week on it, you'll be able to get a bit of feedback. Then there was a question, when do you know when your idea is not working? There are actually two important kind of things. So first is, there's a big discussion when should you ask people for money for your service or product? And there are people who say you should immediately do this at the beginning, because then you find out whether people are not bluffing. But at least you should try to sell the product. There are lots of startups who give it away to see whether there is interest in it. But it's important that you bring forward the idea where you ask something for it, because that will be the moment of truth. There's also a second moment of truth. There are lots of people who like you and like your idea, and they are, let's say, people who support you. But the second moment is where you have to convince people who are not your first-time supporters, which is called crossing the chasm. But that comes a bit later. So then you go to a mass market. But it is good in the beginning to try to sell the product to not people who don't like you. So that is and to see what works there. Yeah, people said that I said banks are devil, but they should. This is one person I work with, but I don't hate banks, not per se. Now, crowdfunding. There was a question. I love crowdfunding, but not for the funding. I think that crowdfunding is great because it matches getting funding with finding out whether people are interested in your product. So crowdfunding is really a way to see whether people are buying. So often you see in crowdfunding that together with funding, you try to sell it. If people are not interested in your product to buy it, they're probably also not interested in funding it. So I think crowdfunding in general is a great idea. It is, of course, business to consumer market often, but it depends a bit on your product or service. But in general, the information you get from a crowdfunding campaign and the feedback from customers, priceless. Then there was a question on Born Globals, as we are an international course. The person who asked the question was already like, okay, this maybe requires a long answer. I think it's very important to have an international mindset from the start, especially if you're in a niche market. The cost may be very high of it, but often the global thing comes in is that you see something abroad, you bring it back to your company, to your country, and then you think, okay, maybe there's something we have. Sometimes the foreign market may be actually more interesting than your domestic market for certain things. And it's good to have an open mind on that. Jerke, these are the questions I took out as quickly.
Thank you, Hein. Ivan, did it give you the opportunity to check the questions that were addressed to you?
Yes, thank you very much. Well, actually, not all of them, and I want to apologize if I skip some of the questions.
No, that's fine. Please take some of them that you thought were interesting or that you can answer now. Please go ahead.
Sure. Well, one of the first questions addressed to me was when I said that it took me 4 months to negotiate with an investor. Well, I can say that it's not very fast process because they are not a very fast. They are not very fast people. First of all, well, then we had to cover. Well, first of all, we had to know each other. We had several meetings discussing the whole project and the whole industry in details. Secondly, we played with our business model, with our financial model. They checked different options. Then it was the process so-called due diligence. It was very short and concise, but still they checked our documents, our balances, because by that time we was a company and we had some initial package of documents and finances. And the last one of the last meetings, it was a meeting where we actually traded. We discussed the stake. We discussed the conditions. It takes quite a few time. Well, to come to the points where everyone is fine. So my advice will be here: don't compromise yourself. Don't give up something that you will be sorry for in a year or in 5 years. Don't think. Actually, it's a quite an often fact when people say, "Okay, I'm going to give up here because I desperately need money, but in 5 years I will try to work it out." No, you won't. So just build your relationship here just in the beginning. The second one, by the way, I fully agree about the banks. In my life, I have never seen a bank that at least Russia, who invested in startup. It's quite unusual situation. Well, based on my experience. Patent process. Well, actually, a patent process is not apply for patent and to get patent. It's not a rocket science at all. Well, what you need just good lawyers who are specialized on this subject. So you need to get very qualified advice and their expertise, and they do everything on your behalf. So it's not a problem at all. To get subsidy, well, first of all, I'm not sure that foreigners can get subsidy in Russia. I can say that I'm sure they can't, but you can have a partner, a native partner. Anyway, in country, if you start your business, your project in a foreign country, it's a good idea to have a partner from locals. In this case, you can apply for subsidy. Though it was 6 years ago, I don't know what the conditions are now, but still, it's still in place. Yeah, how to get first sales? It's a very good question, and in this question, there was also a suggestion maybe to give it for free to get feedback. Never do that. So if you wanna check your product, if you wanna make sure that you do something that the market needs, that your clients love, never give it for free. You need to value your work. You need to value your the business that you are doing, and that's why you need to have a appropriate price for your product. Otherwise, you will never know what is the value of your product, how useful is it, whether there is a product market fit, in other words. What I can say? Well, actually, I know there are many more questions. Unfortunately, I didn't have time to cover others. It's what
No, that's fine. I think actually both of you have covered actually a lot of the questions, because they're very much, of course, all are interested in how to get first financing. And Ivan, what you said, why startups fail, it's not because of finance, not in the first, not in the second, not in the third place. And Hein also stressed you don't need finance to start up your to start up your startup, so to say. I don't know, Hein, did you see a question coming by that you would like to address? But I think actually you both covered actually pretty much all the pressing issues.
Yeah, I see more questions coming in, but we take them up. See what at the moment we're running out of time a bit. So yeah, just I'll give it back to you, I think.
No, that's fine.
Yeah.
To be honest, because I've been looking at the questions, and my response to all attendees is that you should look back the recording that we made, because some of you might have checked in later, and I think all the questions really got addressed in both Heinz from a theoretical but also very practical point of view, but also with Ivan's story about he set up his company.
Yeah.
So I think actually we covered really.
But I think Jerke, to add, I think there are many good questions also how to do unit costs and things like that.
True, but
I will look for some material and share it with the students on where to find a few things. Specifically.
Well, maybe that's a question we could ask Ivan, because you should not give your products out for free. You should value them. And it was indeed a question. I thought maybe we get into detail, but how we get to the point of having a unit cost for the product. So how do you value your product? How did you do that, or how did Alexandra do that?
Yeah, it's a good question. Well, first of all, you can try. Well, surely you can try different prices, but if you understand your product and if you understand the industry, you need to understand your clients and customers. So if you have this scope of knowledge, you can estimate, okay, what place takes your product in client's life, in client's basket, or what the price, what your competitors. Well, because there is no competition. Well, you have your uniqueness, but you're not alone. You can buy, for instance, you can buy jumpsuit, but you can buy some I don't know, shirt, trousers, or whatever. So you as a client itself, because we all have kids, so we know how we're going to pay for that. But still, we need to know our clients, our customers, their possibilities in terms of their salaries, their money, and so on and so forth. So shortly, if you know your market and your client, just try the range and find your sort of equilibrium price.
Thank you.
Can I make some more comments?
Yes,
Jerke?
please.
Yeah, it's because there's still very good questions coming in, and one of the questions that I see now is the last one, that the methods that we're talking about is really a lot about business to consumer, and that what about business to business markets there? And I can just say that this is a great question, because in business to business markets, you cannot really be as unprofessional as I'm talking about. So I really see that. And I think that business to business markets are often done by more experienced entrepreneurs who have a background that Jack Ma was talking about, who, for example, invite agile processes in companies to work with, and this kind of thing. So I fully take that point by Jidin Chen, I think, if I pronounce it well. So I do see that it's about nice startups and nice ideas, but business to business often comes from a much more closer integration with businesses. And you really have to, now some things are the same, because you really have to understand the business process, because business to business is not huge. Often you talk about 1 or 2 or 3 clients, and that you do in business to business. So some of these lessons of really understanding the business problems are still important, but you shouldn't mess around too much with that. And often the funding comes from that business, and you have to be careful with that. I can give a full lecture on this, like that kind of thing. Yeah. So.
Maybe if there's one thing that I would like to ask then still to Ivan, because Ivan, you said you were part of the FFF, Friends Family of Fools of Alexandra.
Yeah.
So Alexandra set it up, and you became an investor with $100,000 US.
Yeah.
So how did you find you?
It's a good question. Well, probably it was a coincidence that we got acquainted with each other via another person who was my friend and who was a friend of hers. But actually, her point was to find someone who could help her with the business, and I was interested to start some project which which I would love. So actually, it is a full coincidence of our interests. So.
And how did you divide ownership?
Well, actually, it's equal, 50-50.
50-50. Okay,
yeah.
Thank you. I think, Hein, I take you up on your promise to give some additional reading materials.
Yeah.
We will add that, dear attendees, to the additional reading on the website, and we will share it with you in the social media where we are all connected. I think we should end it here. I think it was a very interesting lecture based on the comments we received from all of you. So thank you again for being here. Thank you very much, Ivan Sergeyev. Thank you very much, Hein Rolfsema, of course. So this Thursday we're back at 3 p.m. CET with digital entrepreneurship this time. Now, digital entrepreneurship, of course, a very hot topic as well. We will have Arjen van Witteloos-Tuin from the Vrije Universiteit Amsterdam and Beverly Vanella from South Africa. Looking forward to see you there. Please keep bombarding me with your questions, and I will divide the right ones to the right people. Once again, Ivan, thank you. Hein, thank you. Dear attendees, thank you for being here. Looking forward to see you again. Happy King's Day to those who are in the Netherlands.
Yeah. Thank you. Thank you all for all the questions.
Thank you.
Yeah, and the active participation.
Yes.
Yeah.